Hello, everybody. Brian Bogner and Greg Towner here for the April update as we take a look at the markets and the economy. Let's go ahead and jump right into it. It's been quite a year so far. I know we're only in April, but Greg, let's talk about U.S. stock price trends.
Yeah, absolutely. Just like the last couple of months when we've spoken, the market has just kept plowing higher. In fact, just as of yesterday, we roughly equaled the all-time highs from last fall. So we're right back to new highs. Sentiment-wise, there's some mixed data. Some aspects of it get us a little concerned. And other aspects, people are really maybe not believing this. They're expecting that pullback that really hasn't happened. So, and so proven otherwise, new highs are often a good thing when you look back at historical data.
Yeah, and so we're talking about stock prices here. What about earnings trends and indicators and things like that, some of the fundamentals that drive these stock prices?
Yeah, that's exactly right. Just how you put it there. These are what really drive stocks over the longer term. We thought this chart was really interesting, looking at global market earnings trends. We can see over the last several instances when it turned up from a low level, it coincided roughly about a couple months after lows in stocks. And then we saw stocks continue their run after that. So stocks tend to lead earnings. What you need is earnings backing that rally up in stocks. And that's what it's done the last couple of times. It's still early this time. So we can't say for sure, but if it follows the last couple of periods where earnings followed the move in stocks, we could have more legs behind it. Now, in a similar area, but we're talking about the leading economic indicators here, LEI. This incorporates a lot of things, earnings and some other data. Why this is so important, Brian, is because it really has a great track record of raising the flag of concern for recessions at periods when it crosses below the zero level. We're nowhere near the zero level right now. And importantly, we can just kind of see on the far right side there, that little tick up. What that tells us is most recent data that came out showed a 3% year-over-year increase after 5 straight down months. So not only have we ticked up higher now, we're still well above that zero line. We have some key economic data coming up this Friday. We'll get first quarter GDP. People are looking for a fairly low number there, under 2%. But we'll see if maybe there's a positive surprise, but importantly, how that might look going forward for the rest of the year.
Okay, one of my favorite things I do like to talk about, because even though we are here in the United States, there's a lot going on globally as well. And emerging markets is certainly an area here at Parallel that we take a lot of focus on. Can you talk a little bit about that?
Yeah, in recent calls, we've talked a lot about the great valuation that emerging markets have shown and a little bit of their stock price trends. I'm going to take a little different angle at it this time. China, being one of the largest emerging markets, has done a lot of stimulus to their economy. It looks like it's starting to pay off. Back in 2016, they did a lot of stimulus and it really pushed their data higher. And then they're starting to do that stimulus now, and it's pushing their data higher again. So if we remember that period in 2016, we go to the next chart, we can see here that the one-year rolling returns of the actual stocks in emerging markets really coincided nicely with that stimulus that China did. And we're kind of starting from that low bottom point again here now as they're starting up stimulus. Of course, there's no guarantee it's going to end up the same way.
Right.
It kind of gives you a little positive view of things, considering all the other positive aspects we've looked at with emerging markets.
Sure. So U.S. stocks doing well, near their all-time highs. Inflection point here with earnings and also these economic indicators that we look at. And it's good to always see emerging markets, which, it's really the high growth areas of the world starting to show some positive signs. So as always, if you have any questions, give us a call, shoot us an email. You know where to reach us. Thanks for your time today and have a good rest of your April. We'll talk to you next month.